a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the best and worst performing ETF areas of the third quarter. Now, we know that September was a brutal month for stocks. Stocks plunged on fears of aggressive Fed tightening campaign. But before that, in the quarter, we had seen a nice summer rally. But after this roller coaster ride during the quarter, the S&P index ended down 5.3%. The Dow was the worst performer. It plunged 6.7%, and the tech-heavy Nasdaq index, that was down about 4.1%. In fact, that was the best performing in major index of the three, thanks mainly to the better performance in the summer. Looking at the sectors, consumer discretionary was the best performing sector. It was up 3.6%. Energy was also in the green. These were the only two sectors in the green. Energy was up just about 0.7%. Communication services and real estate, these were the worst performing sectors. They were down almost 12%, and we know that is thanks mainly because of rising rates. Now, if we look at the ETF areas that were best performing and worst performing, clean energy ETFs were among the best performing ETFs, and we have talked about clean energy ETFs in recent videos. They benefited a lot from the Inflation Reduction Act, which is the biggest climate spending package in US history. It provides $370 billion to combat climate change. Now, we know that the war in Ukraine and some of the recent climate events which result from global warming, they have accelerated the transition to alternative forms of energy. So that is why clean energy ETFs and nuclear energy ETFs, like uranium ETFs, they have done pretty well lately. Other good performing, best performing ETF areas are interest rate hedging strategies that benefited from extreme volatility in the fixed income markets. So we'll take a look at those ETFs. If we look at the worst performing ETFs, shipping ETF, China ETF, cannabis ETFs, these were among the worst performing ETFs. Now, shipping ETF in particular had done very well in late 2020 and 21. In fact, it was one of the best performing ETFs then, because companies were importing so much because of that pandemic fuels surge in demand, and container rates had skyrocketed. And then because of decline in demand and global slowdown, the shipping rates have plunged. So let's take a look at some of the best performing ETFs and one worst performing ETF. So the first ETF that we are taking a look at is a clean energy ETF. It is the ALPS Clean Energy ETF, ticker symbol ACES. It holds US and Canadian clean energy companies, 55 basis points in expense ratio, and $755 million in assets. It gained about 14% in the third quarter. To learn more about this ETF, please go to the quote page on Zacks.com, and you can use the link to go to the external web page, the ALPS web page for this ETF. Look at what it tries to do. So the top holdings are First Solar, Rivian Automotive, and Enphase Energy. Tesla is also one of the top holdings in many clean energy ETFs. Then Lucid Group is another top holding. You will see about 83% exposure to US and about 17% exposure to Canada. EVs account for about 29% of the portfolio, then solar, wind, and other forms of energy. The second ETF that I'm highlighting is by Simplify. This is a niche strategy, and the strategy has benefited a lot from extreme volatility in the fixed income markets. So this seeks to hedge against increase in long-term rates. 50 basis points in expense ratio, has gained a lot of assets this year and has 355 million in assets, up about 20% in Q3. Again, to learn more, you can go to the quote page on Zacks.com, and using the link, you can go to Simplify webpage for this ETF. So this seeks to hedge against interest rate movements and benefit from market stress when fixed income volatility increases. So there was a lot of stress, lot of volatility this year. So this hedge fund like strategy available in ETF, in an ETF wrapper, benefited. It holds OTC interest rate options, basically long dated put options on 20 years treasury bonds. You can watch the video. Some of the other ETFs also did very well, and these are very niche, very specialized strategies. So make sure that you understand them properly. In fact, I did a podcast with Simplify CEO earlier this year, so you can listen to the podcast too and learn more about their strategies and why they have done so well this year. The third ETF I'm highlighting is the worst performing. This, as I mentioned, holds futures contracts on dry bulk indices. Pretty expensive because this is also a very specialized, very niche strategy, 285 basis points. This is down 47% in the third quarter. Again, if you want to learn more, you can go to the quote page and the BTRI web page. As I mentioned, this was one of the best performing ETFs, benefited from pandemic era, and I had then done a podcast with this ETF provided too. So if you want to learn more about this ETF, which has plunged this year, you can listen to that podcast. Now, on the last slide, I have the comparative performance over the past year compared to the S&P 500 index. So the Simplify product has done very well this year. It is up almost 70%. The clean energy ETF that we highlighted and S&P 500 index have delivered almost similar performance, and BDRI is down about 80% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I will see you next week.